All right, guys, so it looks like we're live here. Trying out this little picture-in-picture thing. Just got this webcam set up. Maybe a little bit of a different look this time. But yeah, let me just get a quick sound check from you guys. If I can get one. Hey, Miranda, how you doing? As long as the sound is good, we'll get going. But cool. All right. Always have technical difficulties, so I always like to ask that. But yeah, so earnings. So Tesla coming, had a nice little pop here and coming off the highs. Let's zoom in a bit there. Now trading a little bit lower. CSX looks like there's market liking that. IBM taking a hit here. I believe ASML reported earlier, but stock selling off a little bit today, down over 4%. Tesla coming in off the highs here. And yeah, CSX, nice pop there. IBM, not so much. Let's take a look here at the daily. So CSX had a really nice run here over the last couple of weeks. Yeah, that's trading up nicely after hours. IBM down to 134, so that's getting whacked really hard. That closed at just under 142. And that is trading at just under 135 now after hours. So IBM taking a hit. And ASML, down 4%, but nothing, terrible here. Just kind of holding up there. But yeah, and then we had Netflix obviously yesterday, and had a bit of a bearish. So it came up nicely, rallied off the lows. They tried to squeeze the shorts out. Then it rolled over, and typically when this type of thing happens, where you gap down and you rally up and you roll over, that's usually a really bearish. It really creates a really negative feel. But you zoom out and look at the daily. I mean, it's holding up fine. You got this inside bar here. It's holding the 20 moving average. So Netflix is still nothing wrong with that on the daily time frame, if you ask me. So, but the big numbers earnings will be next week. I believe all the FANGs report next week, so that's going to be the one. Now, Netflix and Tesla can move the market a little bit, but not like Google, Microsoft, Amazon, and Apple. So that's the one we're going to be waiting on, and I think that we probably hold up on the NQ until then, and really just the market in general. I mean, we look at the spiders, up 0.4% today, challenged the all-time highs. I thought the diamond was going to get there. Let's see what the high was. The high of the day was 356.58, and the previous all-time high in the diamond was 356.60. So it just almost got there on the Dow Jones diamond there. Let's check the industrials. So the high was 35.361, and this one was 35. So you did take it out today on the Dow, at least on an intraday basis. So Dow making a new all-time high. And speaking of all-time highs, how can we not talk about Bitcoin? Yeah, what can you say? Got through double top right now. And I don't know about too many of you guys, but a lot of these, Bitcoin and BITO, Grayscale, Mara, Riot, MicroStrategy, all of these are on hard to borrow list. I tried picking up Mara as a short, just kind of like a, kind of a shits and giggles type play. Not too serious about it, just for like, small percentage. Because I mean, this is a really nice double top, and I like that. We had a doji going on earlier. I liked it in there, and hey, congrats to Bitcoin bulls. Great job on this, but I still have this underlying feeling, and we've never seen this before where Bitcoin's had a double top cycle. Usually when they take out their highs, when it takes out its previous high, it just runs and just keeps running. But I just have, this just feels really odd to me. There's just a lot of hype going on with this ETF, and sentiment's just really through the roof, and we're already kind of overbought going into double top. That's why, I wouldn't have had a problem with picking up a small short on Mara. And I do have a level on Bitcoin. It's not, it's nothing crazy. I'm not saying like this is going to be the top or anything, but at about 72,000, there should be a little bit of resistance. But yeah, I mean, I tried to get in on Mara, short on the short side, couldn't get that. And just hopefully they don't cost me money like they did when I tried shorting GME at 350, or like I couldn't even get XRT at 95, and that was a disappointment. But what are you going to do? So there's a lot of these Bitcoin names on the hard to borrow list right now. I'm not surprised they wouldn't let me short BITO, but that's just what it is. But so some of those things ending up restricted. Let's talk a little bit about the dollar. So dollar did lose. So remember yesterday we talked about this inside bar on the daily and how we held that. Well, we lost that today. So that did close below that, but it doesn't really matter that much because the weekly, you're well away from the low on this inside bar, and that's the more dominant pattern. But just worth noting, the dollar did have a little bit of weakness, and obviously translating over to that is gold. So gold having a nice day. The area that I would look for right here is the high from, I believe, last Friday. So 1797 and 70 cents. You close above that, this probably goes right up to 1840, or wherever this pivot is, 1835, somewhere in that area. But that's your short-term resistance level on gold. But nice little pop today. Silver even better. So now silver is coming into resistance. It's gonna stall out around 24.90. You got this 100 MA. These pivots here, maybe it gets through and gets to 25, but it's going to come into real resistance there. But this is a nice move. Now we could look to potentially trade this if it gives us a good pattern. So I definitely have had that on the radar. So yeah, just keep an eye on silver. Platinum also, having a nice bullish inside bar here. So platinum climbing the stairs, and palladium having a nice day as well. Or actually, pulled off the highs. It was up earlier, but not a terrible pattern here off the lows. Yeah, so dollar pulling back, obviously that's helping PMs. I told you guys about Verizon last week. I said it was a screaming buy down here. Nice day on Verizon. So they reported earnings this morning, and obviously market liking that, up 2.5%, which is a really big move for a stock like Verizon. I know it doesn't sound like much, but for this company, it's a huge move. It will run into resistance at 54, but that was a clear, I mean, I told you guys this is a clear capitulation low. And you see the same thing on AT&T. Now this stock is an absolute dog, but I did pick up calls on it just because it was so oversold. It was it was past the March 2020 lows. It was in a downtrend, and then when you sell off at the end of a downtrend like that, that's usually the bottom. So that finally getting off the floor. T-Mobile having a nice day as well. That's going to come into resistance around 125, but nice pop there. So Verizon helping out those names. And really overall, there's just, it was a really quiet day on Wall Street. We had, let's see what the volume was in the SPY, 47 million. That is not a lot. And that's the problem I have with this rally is look at the declining volume. And I mean, just look at, we're just ripping higher, but this is telling you institutions aren't buying this level. They're not buying these levels. That doesn't mean that they didn't cover shorts down here and they're letting the markets up, but there's some fishiness going on. I mean, VXX did get hit later in the day, but it was positive at a couple of different points today, in the morning, in the afternoon. Yesterday, it managed to scratch out again. It gapped up on Monday. It managed to close positive on Friday. And this is all the while the market, the S&P, was just gap, just higher all day long. And somehow the VXX is managing to kind of hold the flat line. And I brought this up yesterday, October 5th, a couple of weeks ago, 2 weeks ago, put call ratio, equity put call ratio is at about 0.8. It's under 0.54 now. It was at 0.52 yesterday. I think it was at 0.54 at one point today, but a 30% drop in the put call ratio. So we talked about all the bears that were down here, and that's why I didn't want to short the lows, because there's too many bears and it's already oversold. But now it's like a week and a half later, and it's like all bullish all the time. And it's like there's just assumption that, all right, we're just going to blast off to all-time highs, SPX 5,000 by the end of the year. And sentiment is just changing really rapidly. Now, I think we do make a new all-time high. I talked about this inverse head and shoulders here on the SPY. We probably do make a nominal high, but I'm not convinced it lasts very long. But, you know, again, we'll just take it one step at a time, and, you know, we'll just go from there. But yeah, I'll just get into some questions. Didn't really have a whole lot for you guys today. We just had kind of a really choppy day on Wall Street, but yeah, I'll get into some questions for you. I usually just play the stocks. I mean, if I buy when I buy options, I was just talking to somebody about this. When I buy options, it's usually just a bet. So I'll just straight up buy calls or puts for whatever expiry. And I don't really bother with too many hedging strategies or spread strategies or anything like that. They're usually just a bet for me, and I don't put a ton of capital into them just because obviously they're options you could lose 100%. So I just, you know, I use a small amount of money. If they go to zero, they go to zero. But if I win big. So that's just really what I do. I don't do a whole lot of theta burning type strategies or, you know, different spreads or anything like that. I can turn down the latency on the video for you. That might be why. Sometimes a little inconsistent. So sorry if it's a little choppy. Yeah, let's look at oil. It's, again, I have some, you know, I have a short-term level here at about 85. So you got this broadening pattern, this channel here. So, you know, hypothetically, it should pull back at around 85. And then I know I've showed you guys the bigger level, which is also a broadening pattern, but that should take you to about 90 bucks. And that's really where I see it coming into a lot of resistance. You see where it broke down from here. So you had this pivot low, you couldn't get through that, then you broke through it, right around $90. That's going to be some resistance there for sure. But I mean, what can you say? Crude just, it's defied everything I thought it was going to do. But yeah, I mean, it's just, I don't have any sell signal on it, so it can still go higher. Now, nat gas, let's talk about nat gas. Nat gas did finish strong. It was down a little bit earlier this morning. It did have a decent finish. I still think it stalls out. You have a gap fill right here at about 542. You got the 20 MA. I don't think it gets above that. And I do have buy levels for this, and I will be playing that. So stay tuned for that. I know most of you guys are patrons. You probably already know the levels because you've seen my videos, but yeah, we'll be getting into that soon. But I think this bounce here is just going to be more shorter lived. ALGN. Let's take a look at that. I don't know that ticker. Line ticker. Is this like a semi or something? Oh, healthcare. Yeah, so I mean, logically, I mean, I can't say if it's going to do that. It is a strong name, despite the recent weakness. If it closes above this red bar at 608.61, which would basically be a close above the 200 moving average also, then yeah, I would say there's a 90% chance it fills that gap. Yeah, for sure. Let's look at the weekly here. This ain't a bad level on the weekly. But I mean, you already missed your entry though. But yeah, if it closes above that, this is way extended on the monthly though. Yeah. But yeah, if it closes above the 608.61 or yeah, 608.61, 200 MA, it'll go right to that gap fill, and that'll be your next natural area of resistance. If it gets through that, probably about 640. That's going to be your next area. XRT is tough. XRT, I believe, is still heavily weighted. Let me look this up. I believe it's still heavily weighted by GameStop, though. Oh, maybe not. Okay, so they redid their weighting. Okay. Yeah, see, the thing with XRT is it's not, it hasn't really done anything. Like, yeah, I see where you're saying, like, it's kind of rolling a little bit, but there's nothing to say that it's going to break down. I mean, there's a lot of support at 80, even if you got through the 50 MA. Um, there's support, you know, see this big green bar here, 83. It's just a sideways chart. It's really hard to do anything with this. Like, I mean, this is an even tighter range than the Russell. I mean, with the Russell, at least there's a little bit of volatility in these moves. XRT is just flat. It's been flat for a while. Yeah, Visa. I would I said this yesterday. I would have gone long Visa Monday morning, first thing Monday morning, but they report earnings on next Tuesday. So and Visa's not a stock like you know, it's a slow move. It's got a low delta. You know, it's not gonna rip, you know, 5-10% in a week. You know, a big move for this stock is 2-3%. So by the time earnings, you know, they release earnings, I mean, what's the stock going to go up a couple points, you know? And I'm not going to trade it into earnings because it's just too much of a gamble. But this weekly pattern, if it wasn't for earnings, oh, I would already jump down into Monday. You got that inside bar into the 50 MA, 3 test candles. I mean, that's a really good setup on a really stable name. Yeah, if it wasn't for earnings, I would already be all over this. So I would have alerted that out Monday morning. We would already be in this thing. The Fed will, and yes, yeah. And now it's coming out. I just read this morning that Powell sold a bunch of his stocks in February of 2020. I mean, it's just amazing. All these government officials, these Fed governors and these, you know, Nancy Pelosi and all them, they're just like the best traders ever. I mean, they have the best timing. I mean, I hope they sell a trading course so that I can take it one day and be as good as they are. And then they buy the market just days before the Fed does their emergency meeting to add unprecedented liquidity. Man, they're just so good. Let's look at uranium. CCJ, yeah, kind of just holding up. It depends on your, you know, so with uranium, again, if you're looking at this from a long-term perspective of over the next decade, and you want to get exposure to it and you don't have it, I mean, I guess I don't have a problem with you adding a small position here. Just know that I personally can't buy it here because to me, this is chasing because I just don't like how much you're up in such a short period of time. I think that this was a good area to buy on a pullback though. So we got a good opportunity to buy there and we had this failed bear flag. So, I mean, uranium's probably going a lot higher. I mean, I know it is, but, and again, if you're thinking about tucking some away for the next decade, it's not really a big deal, you know, you don't have to have the best entry, but I pointed this out a couple weeks ago, I think. If you bought, so URA, we're just using URA, I don't care about technicalities and which ETF is the best, but so if you assume the all-time high was around 130 and it's at 29 right now, we'll just call it, round it up to 30. So 130 divided by 30 is 4.3, so 430%. But if you were able to get this on this pullback, it doesn't seem like a big move, right? Like over the next decade, it's like, well, what's 4 points? Well, 130 divided by 24 is 5.41. So 500%, 540% versus 430%. That's a whole nother handle of gains that you're missing out on by chasing it up here. So, you know, timing does matter even in long-term investing. You know, that's the difference between a 4-bagger and a 5-bagger, which is not insignificant. Plug power. I think solar stocks could actually be a really good play here. They're really going to be pushing alt energy a lot, and this thing got really overextended. I was actually short this earlier this year, and I thought like 12% was a nice gain on this, but I covered at like, I think I was short around 70 or something. I covered at 60 or something like that, and I had no idea it was going to fall that much. I wish I had, but yeah, this thing just got overdone. TAN, so solar ETF. This is not bad here. You got parabolic overbought, then you had this kind of bearish kind of chop here, and then you tried to break down, and then you reversed, and now it's kind of consolidating above this previous breakout area. So I don't hate solar stocks here. Yeah, if you want to play plug power, so this wouldn't be like a swing trade for me. So we wouldn't necessarily take it on Patreon per se, but if you wanted to play it for like a medium to long term play, yeah, like, I mean, I don't have a problem with it. I think this sector is going to get a lot of money flow moving forward. Yeah, FSLY, same thing. First Solar. Although this is, yeah, this has been a bit of a weaker name though. Oh no, I'm sorry. FSLY. Are you talking about Fastly or First Solar? Yeah, because First Solar is actually holding up really. This is a nice pattern on First Solar. So you have you got a cup and handle here. You could make a case for that for sure. And again, look at where this stock was in 2000. I mean, it's very far away from its all-time highs. So this isn't a terrible setup. I actually like this. Fastly, yeah, Fastly. That was one of those 2020 phenomenon stocks that just couldn't hold up. It's hard to say. I mean, it's holding. You know, you did hold 36. Let's see if we can find a pattern here. Okay, so you can make a case you have a falling wedge. So it is a little short-term overbought going into that, but yeah, if you consolidate and break through that, yeah, it could have some upside. I don't know if I would jump on. I'm not like, I wouldn't be too excited to jump on it or anything, but you could make a case for that. Another one is Zillow. It's got a nice falling wedge too. This is another one of the Cathie Wood rejects. Yeah, it went meteoric and just really came back down to earth. No, Grayscale is never a buy. Grayscale is always a piece of junk. And I'm like, I wish I was, I'm not even exaggerating. It's just, I mean, look at where it is right now. I see what I know what you're trying to get at though. You're basically saying like, will the premium catch up if Bitcoin goes up enough? And, you know, eventually Grayscale will surpass performance on Bitcoin. Yeah, I mean, I think it did actually towards the end of the year, around January. It did, but it only did like at the very end. So the majority of the time, I remember I bought, this is true, I bought Grayscale a couple times. Last year I had an average of like 1276 or something like that. And I sold around 20 I basically I made like 85% on it. I had no idea it was going to go that high. But the point is, if I had owned Bitcoin just outright, I would have made well over 100%. And I mean, it was going parabolic, and it wasn't Grayscale did not start outperforming Bitcoin until like the very end. So I don't really think it's worth even investing in at all. The only thing that I would do with it is, if Bitcoin crashes or has, gets into a really good level and you don't have time to like move money to your crypto account or something, you could trade it short term just if you're just looking for a bounce or something. But it's not going to give you the returns that Bitcoin is. It's a really cruddy ETN. Now hopefully BITO gives us a little bit better of a performance. Now it is a futures ETF, so there is going to be slippage when there's contango, but if it at least tracks it better from a performance standpoint on the shorter term, it could be a better vehicle at least, hopefully. Yeah, I don't know too much about the earnings so much as it's about like government credits and money coming into the sector. And I mean, green energy. Yeah, that's a nice, yeah. I mean, long beat down, and yeah, and it could, we're back above that 100 moving average. So SOL, not a bad pattern there. But it's like these, these EV companies, or, remember what was it Kia or whatever that announced a partnership with Apple? As soon as any company says anything about we're moving into the EV sector, their share price just like doubles in a day. It's one of those things where the green energy movement is seeing so much rotation. Everybody wants to find the new Tesla. Everybody wants to find a new Neo. Everybody wants to find the next, Plug Power that does this. And governments seem to want to continue to subsidize it. Western governments, anyway. And they're not subsidizing oil right now. There's a lot of underinvestment in oil right now across the world. But I think, yeah, solar. I like the solar sector, and I say it all the time. But I'm actually about to probably pick up some like Aurora. Just as like a long term, just to, tuck away a few shares long term, maybe even some leaps, and maybe I'll just diversify with a little bit of Canopy and Tilray. But the writing's on the wall. The United States government is desperate for revenue, and they're going to have to legalize marijuana at some point on a federal level. Now, if that's next year, if that's in 4 years or whatever, it's going to happen, but these stocks will absolutely explode when that happens. And not to mention, it has been free money. See, we're just looking at Tilray here. Let's look at Aurora because you can see a little bit better. There we go. It's been free money to short these companies for a very long time, and they all have at least 20% short interest in them. And what happens when a stock becomes free money to short is it becomes crowded, and then you get one of these or one of these, and that's really what happens to it. So I have no problem tucking some any of the cannabis names away long term. I think it's just a no-brainer, honestly. Hey Fareed, how you doing, man? Glad to see you. Well, and Canopy is owned, I think 40% of them is owned by Constellation Brands. So if you're worried about legitimacy, I mean, like Constellation is as legitimate as it gets. But Aurora has been the dog of the sector for the longest time, but I really like this wedge breakout. And if you look over the last month or so, this nice little move here. By the way, this from a technical standpoint, let me just clear this up. This monthly inside bar, it's really nice there on Aurora. But if you look over the last month, Aurora's really outperformed the sector. There's CGC, there's Tilray, there's Kronos, and there's Aurora. Aurora's up. So I don't know, maybe somebody knows something. Maybe some fund or some, maybe Nancy Pelosi knows that they're going to do a deal with, Pfizer or somebody. He's going to buy them out or something. But this is the this was the dog of the sector for the longest time. But now it's starting to shape up here. So I wouldn't be against diversifying. Maybe buy a little Aurora, maybe buy a little Tilray, buy a little Canopy, or if you don't want to do that, just buy MJ. The ETF. You can buy calls on it, Leaps or something. Oh, you can bet they're going to put federal sales tax on it. I mean, they're going to screw it up, just like how California screwed it up. I mean, I watched this documentary a few years ago. I can't remember the name of it. It was on Netflix, and it's all these California growers, and they're talking about how ever since they went legal, they've been losing money hand over fist to all the people who are literally having farms across the street from them and doing it with the black market, because it's hundreds of thousands of dollars in red tape, permits, licenses, taxes, fees. And the federal government isn't that different from California in that capacity. So I mean, they're definitely going to mess it up. There's definitely still going to be a black market, but it's, there will be a major market share for it, regardless of that. Heck, so I think, is that are you sure this is an ETF? Huh. Small cap blend. I just follow MJ. I don't know about that company. I know I just follow MJ. But and there was another one. I think they was it GW Pharmaceuticals. So they merged with another company not that long ago either. So I mean, there is M&A in this sector, and a lot of the companies that were around a year or two ago are not around, and they've merged. So there's M&A. Like, this is, and the sentiment with these stocks is still like, oh, they're junkers. That's the stuff I want. I want the stuff no one else wants, because I'm going to get in before they do. Free, yeah. I mean, they're giving out everything else for free. Krispy Kreme donuts and stuff like that. Yeah, it's really it's the Pelosi though. I mean, like it's crazy how all this insider stuff is coming out, and it's like all over FinTwit and everything. Um, like a lot of congressmen and stuff, and all these Fed governors getting exposed for all this stuff. I mean, it's like, I mean, I know, we all know the government's corrupt and stuff, but like, how is it, like, when I hear that, like, Rosengren and Kaplan are just like just straight up just trading stocks, like, how is that even legal? Like, I just can't even wrap my hand, like, how is that not, like, how is that not allowed? I mean, it's just mind blowing. I mean, I could see, I'm not against, and people think like, oh, they shouldn't be able to own any stocks at all. I don't think that should be the case. Like, if you're in Congress, I think you should be able to have a 401k or an IRA or something like that. But while you're active, a member of Congress, you should not be able to do anything outside of that. I mean, it's just like, it's common sense. Yeah. Yeah, I didn't, let's see. 4 hour ES. I know we talked about it. I actually was looking at the NQ. Hold on. Let me see if I can find what you're talking about. I don't normally use the 4 hour time frame, but Yeah, there you go. I've let's take a look at the ES. The CES is holding up okay though. ES is fine. I'm sure the YM's okay too. A little divergence on the YM, but yeah, the Nasdaq's the weak link right now. But I am interested. I know everything over the last week. I know everything over the last couple of days looks uber bullish. But if we were somehow to reverse tomorrow and Friday and close below 44.72, that would be about as bearish of a thing that could possibly happen. Because that would put you back inside of this red bar. I'm not saying it happens, but I don't know. This move is just, it was a lot in a very short period of time. And we went from very bearish sentiment to all of a sudden, oh, that's it, all-time highs, SPX 5000 by the end of the year, bears are idiots, blah, blah, blah. Yeah, we talked the telecom. So AT&T finally got off the lows. This is a weak name, but it probably has upside to about 27. And then Verizon reported, and that's helping the sector. Verizon reported this morning, big move on Verizon, 2.5%. That's a huge move on Verizon. That will run into resistance at 54. And then T-Mobile had a really nice move off the lows. That will have upside in the near term to 125. But yeah, it was an obvious, to me, I mean, it was just an obvious screaming buy. That's why I tweeted this out last week. Anytime you have a downtrend like that and then you have a sell-off at the end of the downtrend on volume, it's almost always the bottom. And look where you went into on Verizon. You went into this big green bar. This was the March 20 lows. This is where you sold off and reversed. I mean, that's where the institutional money is sitting. You think they want to defend that? Look at that weekly candle. I mean, that's a huge reversal. Look at the weekly on T-Mobile. Right now, if we closed this week, that's an engulfing reversal. AT&T is weaker, but you know, if this can close back above this 2608 on the week, I think you have a good bottom in there. All right, Ian. Thanks, man. I'll see you. Let's talk. I know I sent you, Fareed. I know I sent you the weekly MACD on the. We're looking at the. There we go. I know I sent you the weekly MACD on the Dow. I think I brought that up yesterday as well in the live stream, I want to say. Or maybe that was the patrons only video. But yeah. Look how bullish the MACD is. Actually, let's just look at the let's just look at the Dow really fast. Regular Dow. Look at how bullish this MACD is. But when you go to a weekly, you can see a huge divergence there. And if, excuse me. And if we were to somehow reverse and close lower, like if we close below this red bar high on the week, not only would you have the divergence, but the MACD would be continuing lower. So that is something to keep on the radar. And that's the thing, not enough people look at this stuff. They look at the daily time frame, and that's all they look at. And the weekly and the monthly are the more dominant ones. They tell you so much more. Well, let's look at the transports here. So yeah, bullish MACD on the transports. Let's see the weekly. I don't see the weekly's turning up though. There's actually nothing wrong with this. There's actually nothing wrong with this right now. Yeah, there's no volume in the market. And that's the thing is, it's that's twofold. So there's like a double-edged sword there. You don't really want to short a dull market, but at the same time, volume is a confirming indicator. And not enough traders utilize it. It just blows my mind. But now, the market does not need heavy volume to move higher. However, when it's coming off of a low, you typically want to see heavy volume because that means that institutions are participating in the move up. Now, once the trend has been established, then it can continue going higher on light volume because it's just algos and retail pushing it higher. But at the lows, you see how last year, let me just pull it back so you can see it better. Like, note the increase in volume here at the lows. You sold off. Look at this candle here. This was a red candle, but how you came off the lows with the extra volume there. Then you got juiced up right there. And then obviously this one, I mean, some of this was selling too, but and then you had the light volume rally. Well, we never really had a day where there is no real day here where I was like, okay, that's definitely a low. There was no major volume spike. There was no capitulation. If we look at the VIX, outside of the initial spike, we were making lower highs in the VIX. Usually the VIX will make a higher high, or it will spike when the market bottoms. And we did not get that. So that, I mean, there's a lot of reasons why I'm cautious here. I mean, I do think we do make a new nominal high, but I don't know how long it lasts, honestly. I mean, we could have a blow off top. We could have a 2017 type move. And I've talked about that. We could have a move where we do one of these right into the end of the year. I've not ruled that out, but that lower low there, that's really significant to me. So I'm not convinced of anything right now. Haha, thanks, Fareed. Appreciate that, man. So I thought about the November seasonality. We do have some. Let me just pull it up here. Give me 1 second. I was trying to look into it a little bit last night. I think that's the one I'm looking for. Hold on 1 second. Let me see if I can pull this up for you. Just give me 1 sec. I just got to add a window here. I don't know if it's going to let me pull it up, but basically, if you go to equityclock.com, you can see them all there. I'll just go to equityclock.com and type in SPX seasonality. But basically, the 20-year seasonality, you do have a increase in the beginning of November, and then there's usually quite a big dip in November, and then you do rise into the end of the year. But there's a lot of other things that going on that make me think a little differently here. But I mean, yeah, you always want to give the market the upside bias unless you have some sort of sell signal. But yeah, as far as seasonality is concerned, yeah, generally, I think the post-election year, which we are in, that is usually an up November, and then followed by a lower December. But again, this is just averaged out, so it's you don't want to just go all in off of that. Thoughts on retail? Like what, Target? Home Depot? Yeah, Pfizer had a nice fall. Came into a nice support area there. So it's holding up. I mean, I wouldn't, if you wanted to long it, I mean, I guess you could look for pattern. It's in decent support. And J&J, it's holding up as well. Came well off the highs though. But a lot of these medical companies are very news driven right now, so just bear that in mind. Like especially NVAX. Talk about getting whacked. I posted this on Twitter last night. That's a perfect measured move from 260 to I think it was 260, 160, probably down to 110. It was trading at 110 after hours yesterday, so it was a perfect measured move. But these things are very news driven right now. Amazon, it's hard to believe, but I actually kind of like Amazon long term right now. Like just from a technical standpoint. I brought this up yesterday, but you were parabolic, and then you worked that condition off by chopping sideways. Now you got the 20 MA sloping back up and catching up to price. You also have you can make a case, there's an inside bar right there on Amazon. That's the same reason why I liked Netflix a few months back. But look what Netflix has done. I'm like bearish overall on tech in the near to medium term, but I got, the chart says what the chart says, so. Engine. What's that? IGNT, I think. It's definitely not it. uh, yeah, no problem. All right, guys, I got to get going. I will definitely talk to you guys tomorrow. If anything new comes up, I will be sure to let you know via Twitter or Patreon. Yeah, drop a like, thumbs up, and whatnot. Thank you guys for coming out. Hopefully, I will talk to you soon. And you guys have a great rest of your night. Take care.